Hey, so I guess you've probably clicked on this video because you say have what, $1,000, $2,000, $5,000, $10,000 of savings. You're quite young. You want to start, I guess you've been looking at the stock market. You're not too sure how you would go about investing in the stock market, or you're wanting to start investing to be able to build financial wealth for the future. You know, you have money in your savings account, but you don't really have any, I guess, plans with it. So you're wanting to, I guess, seeking other alternatives to make your money work for you. You know, you want your money to grow. You want to make more money from your money. Savings account just isn't cutting it right now. And you've been looking at the stock market and you want to start investing as soon as you can, so you can be as financially free and wealthy as soon as possible. If that's you, you've definitely come to the right video, as this is pretty much a whole crash course of the stock market for beginners, just touching on a few things for beginners, and I plan to make some more stock market videos in the future. So look, if what I just described was you, be sure to hit the like button and subscribe for more content, because if you like, that tells YouTube that you like this video, and I'm going to appear in more searches and things like that. So please like the video. Look, just before we get started, if you think the stock market is, I guess, some kind of get-rich-quick scheme or something like that, you're looking to be in the stock market within, say, you know, a few months or so and make a whole bunch of money, I guess that's not going to happen. The stock market isn't a get-rich-quick scheme, unfortunately. It's something that takes time and patience, and as long as you're in the markets for years and years and years, you will get good returns, and you'll be able to grow your money for a very long time in the future. But it's not something where you're just going to start getting rich and start bowling in like 6 months. So do not have that expectation. It's about building your net worth and I guess growing your capital by using these assets. And I guess if you're okay with that and you have plenty of time and patience, then the stock market is definitely going to be right for you. And you can 100% definitely become rich in the stock market over time. I guess the historical average, or the average of rate of return in the stock market, so I guess the percentage that your money is going to grow by each year, on average after inflation is around about 7%, where you compare to, I guess, your savings accounts now that are, you know, lower than 2%. So if you have the time and patience, the stock market is definitely where it's at, and you will grow your money very fast. Now, I guess, what exactly is the stock market and what is a stock and how does it work? Let's get into that here now. So I guess a stock, or you having share in a stock, is a small, very, very small percentage of a company that you would own. So if you own one share, say, of Facebook, I'll use Facebook throughout this video because it's, you know, pretty much my favorite company, and it's a good example to always use. So if you own one share or one stock of Facebook, you own a very, very small percentage of the company. These stocks are listed on the stock market. That's where you can buy and sell shares in companies. So let's just say, I guess, you have a company, right? And you divide it into 100 little chunks, really, and you say own 50 of the chunks, someone else owns 25 and someone else owns 25. You have, I guess, 50 shares in that company, if that makes sense. So the stock market, and I guess investing in companies that are as big as Facebook, it's like that, but on a very, very much larger scale. I guess we'll use my example of Facebook here. Right now, as at the time of recording this video, Facebook is around about $190.07 a share. It has a market cap of 541.848 billion, which means that the market cap is, I guess, how much the stock is worth. The stock price, $190.07, is how much you can buy a piece of the company for. So if we divide that 541.848 billion by $190.07, that's how many shares are out to the public of Facebook. You'd find that roughly around about 2.85 billion. So there's 2.85 billion pieces of Facebook that anyone can buy. And I guess, you know, part of that is owned by, say, Mark Zuckerberg. Mark Zuckerberg would own a large amount of all of those. That you have other big institutions that own large amounts of those as well, and you can have, you know, guys like us that can own a fairly large amount, as long as you have enough money to buy the amount of shares, if that makes sense. Now, pretty much, I guess you're probably asking, why would we buy Facebook at this price, or how is there money to be made? And that's a very good question, and we'll get into that now. Pretty much, if you've ever done any, I guess, kind of simple economics in school before or something like that, you would know about supply and demand. Demand is, I guess, just how many people want to buy Facebook at this price. So I guess many people buy and sell shares every single day, and you have those, you know, your large hedge fund institutions that buy, you know, sometimes millions and billions of shares and sell off millions of shares in companies every single day. So pretty much, if there's more demand, so if there's more people wanting to buy Facebook, and there is more people wanting to sell Facebook at that price, the price is going to go up because there's not any shares left, and I guess no one wants to sell their share at say $190, but someone's looking to buy it at say $192. That's what's going to push the price up. And that's what, I guess, that's how you make profits in the stock market. If you buy, say, Facebook, let's just say you bought Facebook here now at $190.70 a share. The stock price were gradually going to increase, say, over a year or so. Let's just say over a year it got up to, say, $210 a share. Then you could then sell your stock that you own at $210, and you've made $20 on that because you bought it at $190, because the company's worth more, or it's seen to be of a higher value, or it's more highly valued by someone else at that point. And like I said, generally over time, stocks, or the price of stocks, increase by an average of 7% year over year. So I guess if you were to say just hold a stock for 1 year, generally, I guess a total average across the whole stock market, you are going to make 7% on your money. So if you put $100 in, you would make $7 over the year's time. Yes, I know that doesn't seem like a lot. If you compare that to, say, a savings account that's say paying 1.5% interest, if you have $100 in that over time, over a year, you're only going to make $1.50 on that. And when, I guess, you see, when you start to scale this up, and when it gets bigger and bigger and larger, your profits are going to be monumental. Now, I guess, why would a stock price go up or go down? We've talked about, I guess, that demand, where if, I guess, more people want to buy this stock than sell it, but why would more people want to be buying this stock even though it's at a higher price? And that's, I guess, simply because the company's doing better, or the company is now seen at it being worth more. I guess whether that be due to, say, some good news. Let's just say Facebook, say, these are made up numbers now. Let's just say Facebook made $100 billion in profit last year, and they released their earnings for this year, and they've made $200 billion. You know, that is a massive growth for the business. That's 100% growth in net profits. That business is going to be seen as more valuable now, as they're making more profits, and it's making more money for everyone involved. So of course you want to get into that business. You are going to have to pay a higher price for that, because I guess everyone else is going to also try and be jumping in and buying that business because they see it as fairly valued, and they want to get in on it too. That's what's going to cause the stock price to go up. I guess the exact same opposite can happen with a stock price going down. If a company is getting worse and worse, or I guess it's getting a bit uncertain for that company, then the company is going to be worth less and less. For example, I guess you could say, look at an airline stock right now. Due to everything going on, no one's flying, so they're not going to be making any money, right? You would, if you have a look at an airline, I'll put an airline stock up here now, you can have a look at what the price has done recently due to everything going on in the world right now. No one's able to fly or anything like that. So those businesses aren't going to be making any money. And I guess smart investors realize that, or anyone can really realize that. So they're selling out of their stock because no one wants to hold that anymore. But this is where, I guess, the most important factor, or the most important part of the stock market, is time. As long as you stay in the market for a long period of time, like I said, on average, over an average of 30 years, I think it is, the stock market averages a 7% return after inflation. So if you have held a stock or you're in the stock market for 30 years, on average you should see a 7% return each year. Some years you may get a bit more, say some years you may get 20%, some years you may get 3%, some years you may even lose some money over time, but you're only losing money on paper. Unless you sell that stock, that's when you get your money back, and that's when your, I guess, loss or your profit is realized. But over time, that's going to average a 7% return each year. And if we have a look at what a 7% return each year is going to, I guess, do for you in terms of growing your money, it's absolutely astronomical, and that's just for an average investor. If you can beat the stock market, or you become somewhat of a good investor, you can get, say, an average of 10% return each year. If you have an average of 10% return each year, look what this does for you. It's absolutely ridiculous. And then I guess if you're really good, you can have you can sometimes even average a 15%. I know Warren Buffett at one point in time had averaged around about 15 or 20% return, or maybe he even still does. I'm not 100% sure, I'm sorry, but look, if you have a look at this graph here of an average of 15% return, it's absolutely ridiculous what this can do for you in 30 years. Now, I guess another question that you probably have is, how do you buy and sell stocks? It's pretty easy. You just have to set up pretty much a brokerage account. A brokerage is pretty much where you would use a stockbroker. You give them the order that you want to, say, buy this amount of shares at this price. They will try and fill that order for you. Back in the old day, they used to do that, you know, over the phone, or someone actually used to try and do that for you. Now it's pretty much all automated through a computer system. But you need to set up a brokerage account, fund that brokerage account with your own money, and put in those orders. And then your brokerage will go and buy or sell those shares of that company for you. The brokerages that I use two different brokers, one for shares in Australia here, and I guess one for shares overseas in the US. I just use the Westpac, I guess, investing app, and the Westpac, use Westpac as my broker for shares. It's pretty much an Australian bank. I use those for Australian shares. It's pretty much the easiest. You are going to get charged a fee, I guess, for most brokerage platforms you use each time you buy or sell stocks. So that's why I said it's more beneficial for you to, say, invest $1,000 at a time, $2,000 at a time, as you're going to get charged, say, around about, let's just say an average of $10 fee. So you're going to have to, I guess, make $20 just to cover the $10 buying fee and the $10 selling fee before you're going to even get any profits. That's just to break even. Whereas if you, say, invest $1,000, then the company's only going to have to go up by a small percentage to pay that $10 purchase and $10 selling fee. Do you understand what I'm saying? And I guess what I use for US shares is a platform called Stake. Stake allows Australian investors to be able to invest in the US markets quite easily. They don't charge any kind of brokerage fees for each time that you buy or sell. Every time you put your money into the account, they will charge a fee for changing your, say, Australian dollars or whatever currency you're converting over into US dollars. That's how they make their money. It's quite a small fee, and that's how you transfer it over to fund your account. And look, I guess if you are wanting to start investing and you are wanting to use the Stake platform, I'll put a link down below for Stake. Like I said, it's what I use. And pretty much using that referral link that I have down there, if you sign up and you fund your account within 24 hours, you will get a free stock. I think it's valued between $3 and $125. So if you're looking to start in the stock market, you can get a free stock straight away if you use that referral link down there. I get a free stock also, so it would be good if you would do that if you're looking to start investing. But I guess, guys, pretty much with the stock market, if you invest in safe and great companies, say like Facebook, like Google, like Amazon, over the long term, you are going to make killer profits, and you are going to grow your wealth quite significantly. But please always do your own research. You will need to, I guess, research what other kind of measurements that you can use to value stocks, and say look at income statements and learn how to read balance sheets and things like that. Do your own research before buying a stock to make sure that it is a great company. As long as you do invest in great companies though, you will make money over time and you will build your wealth over time. I assure you of that. Do not make short-term moves. make long-term moves and moves for the long-term future, and you are going to grow your wealth significantly. That's what the stock market is for, and the stock market is great for that. And I really hope you enjoyed this video, guys. I hope you've learnt a bit more about the stock market now. This is encouraging you or making you want to, I guess, invest in stocks or have a look into it further. I definitely would. It's something great, and it's a great way to build your wealth if you have patience over time. I assure you of that. So if you like the video, guys, please hit a like. Like I said, it tells YouTube that you guys like this content and helps me out. And also subscribe if you want to keep updated with more content. And that's all from me today, guys. You guys have a good one.